Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Barajan, currency analyst, and today is Monday, March the 12th, 2018. The pairs we're going to be looking at this week are dollar yen, the euro dollar, the pound dollar, and gold. Starting with dollar yen, we can see that those gains we saw towards the end of last week quickly lost steam. We can see the stochastic oscillator starting to head lower after breaking into overbought territory. Looking at the RSI, it's painting a much more neutral picture with the indicator hovering just below the 50 neutral level. We saw strong resistance forming around the 107 key level over the past two trading days. We would need to see a break above that level to see a much more solid upside strengths, and then the next key resistance could then come from 107.90. A break above that level would then clear the way towards the 50-day moving average just below the 109 level. On the other hand, if we do see today's reversal gaining further traction, and then the near-term bias turns bearish, support could come from the 106.10 level, which is the 261.8% Fibonacci retracement of the up leg from 110.83 to 113.74. Below that, we have that 16-month low of 105.24 from earlier this month. A break below that level would indicate a resumption of the medium-term downtrend, and then we could then see key resistance coming from around the 104 level. Let's now turn our attention to euro dollar. We can see the euro dollar is also fairly neutral at the moment, holding just above the 50-day moving average. We can see prices have entered the Ichimoku cloud, currently trading just near the top of the cloud. So that's also another indication of a neutral outlook in the near term. Also, we can see that from the RSI as well, being flat at 50. If we do see, though, any upside move, resistance should come from the Kijun Sen line of the Ichimoku cloud at around 1.2350. A break above that level could then open the way towards that 3-week high of 1.2445, and then a break above that would then clear the path towards that 3-year high of 1.2554 we saw back in February. If we look to the downside now, though, the 50-day moving average should provide support around 1.2280. A drop below the 50-day moving average would turn the near-term bias to a more bearish one, and then we could then see the next support coming from around 1.2150. We can see 1.2454, a low from back in late February, and then the bottom of the cloud around 1.2125. So that suggests a potentially strong support area in that region. In the medium term, though, the pair is still fairly bullish, just about holding above the 50-day moving average, but it is at risk of turning neutral. It's a similar story for the pound. It's also neutral, though the risk for sterling is to the downside. Prices are hovering just below the 50-day moving average, and the 50-day moving average is the short-term resistance level. A break above the 50-day moving average could then potentially open the way towards the 38.2% Fibonacci retracement of the up leg from 1.3302 to 1.4344. Above that, we have the 23.6% Fibonacci at the 1.41 level. But if we do see further losses, we currently do have immediate support being provided by the 50% Fibonacci retracement at around 1.3850. A drop below the 50% Fibonacci level would shift the focus to the downside, and then we could then see the next support coming from the 61.8% Fibonacci at around the 1.37 handle. And our final pair for today, or final instrument is gold. Gold is looking fairly bearish at the moment. We can see it's in the stochastic oscillators. The percentage K line had a bearish crossover with this percentage D line and is heading towards the 20 oversold level. Prices though have managed to find some support from the 38.2% Fibonacci retracement of the up leg from 1,236 to 1,365. A drop below that level though, we could then see prices targeting the 1,300 level. 1,301 just above that key area is the 50% Fibonacci retracement. It was also 2 months low early in the months of 1,302.70. A drop below the 1,300 level would be a bearish signal. It would open the way towards the 200-day moving average. On the upside though, we could any upside push could see the 50-day moving average providing resistance at around 1,330. Just above that, around 1,335, we have the 23.6% Fibonacci retracement, with the next resistance above that coming around 1,350. In the medium term though, despite the gold consolidating since late January, the current uptrend remains just about intact. We actually had a steeper trend line. That trend line was providing support before it broke below it, and then that same trend line acted as resistance. Now we've got a new trend line, a much more shallower one, so that also is a key support area to watch. That's it from me. Thank you very much for watching and have a great day.